All right, guys, welcome back. Today we're going to talk about credit and homes. Is it a good time to buy? I have a guest speaker coming in talking about just home buying in general, the process, because I'm getting to a point where people think that, hey, from one day to another, you feel like, hey, I want to buy a house. And then credit ain't right, paperwork ain't right. You have, if you're an entrepreneur, I think you need 2 years of actual entrepreneurship to show, hey, I can make this income work, you know? And there's a lot of probably questions that you guys might have. I think one might be that, hey, I pay $3,500 in rent. Why can't I afford a $3,500 mortgage? You know what I mean? That's another question. Like literally, if you guys pay a lot of rent, hey, how come I can't afford $3,500, mortgage if I could afford the rent, But it's all algorithm, it's all risk. The bank wants to lend you the money, but there's an algorithm, like, can they pay it? Right? Based on what you make, what is the probability of you defaulting on that loan? Same thing goes for credit, right? I tell people, don't focus on the score, focus on the profile. Focus on the profile, but at the same time, the score matches up. So, like, I'll give you, if Van Cat has a great score, chances are he'll get approved for a credit card. But remember, you guys can fluff a score. And I'll give you an example. My son is 18, got a 750 credit score. That doesn't mean the bank's going to give him 20 grand because he hasn't proven himself to get 20 grand in credit. What he's done is he's been able to, show a good score, but the only reason he has a good score was because his mom and I added him to a card 4 years ago. So he's got a lot of history. He's got 5 years of history, and you guys can check Credit Karma, and on Credit Karma, you'll see, hey, man, how come I only got 2 years of credit? I know I've been doing for longer than that, but it's what it is you guys are closing your cards. When you close your cards, you lose the history. You know what I'm saying? Like, it's sad to say, but I would only close the card if I got another big boy like next to it with a higher limit, and then I'm riding to die with that card, meaning I'm never going to close that card. Okay, so there's people that might have a first premier, but they don't want to close it because that was their first premier. That was their baby from 15 years ago. So if they close that card, they're losing that history. Okay, and that's all a factor to obviously obtaining a good credit score. You need good payment history. Also, you need to be 100%, no missed payments. And for those of you who are here with one or two late payments, right? We dispute that for you, but you also, just for reference, right? You can call the company and you have to say the right things. They're not going to just delete it to delete it. Okay, we use as 15 USC 1666B, and it's a billing error. That's what we use to back you guys up, because some of you guys on your report, you guys might have November is late and then December is late, but only December is late on Experian, and then on November it's showing TransUnion and Equifax late. So it doesn't make sense. It's like, is it November or is it December? And that's just kind of like when it comes to arbitration and kind of like arguing with these, pleading your case, you show that shows like a billing error. Like, look, guys, you guys made a mistake here. There's no reason I could be late on November and December if it's not consistent on the months. It's either I'm straight late in November, all three credit bureaus, or just I'm late or I'm not late. There's no like, in between, or this one's reporting, but these other two are reporting on a different month. So that's, you can always challenge that. You as a consumer can challenge everything off your report. Okay? Everything can be removed, guys. Everything. Student loan removed. Even your credit utilization can be removed. Everything. You don't have to show nothing off your report. That's your privacy. Remember, the credit bureaus, they're not a credit bureau. They're a credit monitoring service, whether you like to admit that or not. The credit bureau, there's only one credit bureau, and that's the CFPB. You can Google that. That's like the big boy. That's the big brother. they punk everybody else. The CFPB, they will punk Experian, TransUnion, and Equifax and say, look, you need to remove this because this is not accurate. The customer complained to us, this is not accurate. So we go challenge the CFPB when it comes to that point. If they're not listening to us, hey, there's a mistake on this account, right? You're not reporting it accurately. They'll say it's verified when it's not. They just probably copy and paste a letter. Hey, we verified the information and we're just going to leave it there because it's verified. That's not really doing their proper job. Okay. And then when it comes to collections and charge off, you know, they sold that debt because you weren't responding to them, whether you changed phone numbers, you moved, whatever the case. So they're like, hey, you know what? Macy's is like, hey, man, we're losing out on $500. But this collection company comes in and they're like, look, Macy's, sell me 1,000, not $1,000 worth. Sell me 1,000 list of your clients and we'll buy it for 5 pennies on the dollar, maybe even less. Okay. So I'm not a math major, but if it's something's 500 and they're doing 5 pennies on the dollar, that $500 collection, I don't know, maybe is it $50, maybe less, maybe even less. So way less, probably. So they're buying that debt. So they owe the debt because they bought it. And what they try to do to you guys is they'll call you, they'll punk you, and they'll say, hey guys, I need you to pay that 500. Oh, you know what? Can you do 400 today and we'll remove it? Which what happens is sometimes you guys get riddled in, you pay it and they never remove it. It's still on your record because they don't care. They just want the money, you know? And then they know that they're coming up because these collection companies are buying $10,000 worth of collections that they know that they can get like $80,000 worth, right? Because some of those guys are good salesmen. They'll be like, hey, what's up, Alan? How you doing, brother? Hey, man, just knock out this collection real quick, bro, so you can get that house, bro, and we won't be off your hair. Sound good? How much do you owe? 250? Hey, look, bro, I'll settle for 180 right now, bro. You give us 180, bro, we'll delete it for you, you know? And they tell you, okay, well, the only way to do that is if you get something in writing. Hey, give me something in writing saying that you will delete it. Because other than that, there's no, you know, I can't trust you. You know, and these are they manipulate. They'll take advantage of you so you can just pay them something. Something for them is better than nothing. They have a threshold though, like, hey, you know what? Don't take less than 200 because we're not really making much, right? And these collection people, they get a commission. You know, that's when it gets juicy for them. They know, hey, their threshold is this. If I get a little bit more, maybe I get a little bit more commission. You know, so like I said, this call is special because I want you guys to wake up to, hey, owning property, seeing what's out there, you know, just to look, hey, you know what? Can I own another property? What's the market looking like? And our speaker, he definitely been in the space a long time. He mainly deals with houses up north. So if you're up north here, definitely connect with them. I think with the realtor, as long as, and I know, like I said, if you're a realtor out there, you're watching, no shade to you, bro, but you know, everyone got their own sales way, their own, you know what I mean? And when it comes to being a realtor, I feel like, or any kind of business, just be genuine, right? Be genuine, look out for the client's best interest. You know what I mean? Like 3,000 closing costs, it might not be a lot to you, but to them, yo, that's a lot on top of, you know, the down payment and this and that. So, you know, don't act like it's nothing. Always value the client, give him more value. And Victor, there's no fluff in him. Like he's straight up, will tell you like how it is. He's about the relationships. You know, long story short, he signed up for my mentorship for Amazon. All right. Amazon was doing great when it was drop shipping. And then obviously there was sour stuff with drop shipping. Bezos didn't want no more drop shipping. And he signed up, you know, he paid 3,500, you know, and I was guiding him. You know, unfortunately, it wasn't for him. Like it wasn't for him. You know what I mean? But you know what I mean? Like at the end of the day, I wanted to give him value. So what did I do? Yo, Vic, I got you, bro. I got you into Navy Fed, right? It was just all love. I wanted him to grow, right? And then he applied for a credit card. How much you think he got on that credit card? Anybody? Well, how much y'all think?
20K.
20K.
50K.
You got 20K, dude. You got 20K off the rip, dude. He was so grateful. You know, and I put him on some credit game because I just didn't want to go out like that. Like, hey, look, bro, the drop your shipping wasn't for you, but let me give you some value, bro. Let me plug you up here. Let me do that. You know what I mean? Because I feel like that's where the real energy's at. And then we've been cool. He's been giving me a lot of clients. You know, I kind of tell him, hey, if you're up north, definitely Vic is one to. He ain't gonna give you no fluff, you know. So that's why I really, when it comes to realtors, I value him. I want him to give you guys the game. You have questions, definitely ask him, okay? Because it's a scary market, and what I mean by that is like people don't know if I buy now, am I gonna be screwed? Like it's probably like that time where you buy in 2007, which I never bought in 2007, but you know, people buy in 2007 and then 2008 came and that same house they bought is like half of what they paid for, and they're just like scared, like, man, dude, did I just really pay 500,000 and now my house is worth 250? I still got to pay the note, and I'm upside down with no equity. You know, like that, like you just don't know. So definitely have your questions regarding just home ownership. But if I had to do everything all over again, I feel like, you know, one thing that I would, instead of buying like the house initially, I would go buy like a triplex or fourplex first. And I would live in one for a little bit and then rent out the rest. Because, and I'll let him dive in. I'm not the real estate expert, but you can use.
Santiago, would you have this meeting in Spanish?
Yeah, I'll have it in Spanish on Thursday.
Cool. Sounds good.
All right, brother. So you can have those other 3 or 2 units as income because they know that you're going to be renting it out. So what that means is if you only make 70K a year, now those 3 extra units, now guess what? Now those are, let's say $800 a month that you're going to be renting it out for. Now those become like, let's say 8 times 3, so 2,400 to what you would be making because they use that as income now. You know what I mean? So that, like I said, there's little things that you can do for, you know, in buying a house. And like I said, guys, if house is not realistic for you right now, you know, think of a condo. But he's the guy that's going to tell you if the market's good, if the market's not good, you know? And you know, definitely, like I said, I want to bring up the speaker so he can go right into it, go right into the hot sauce. And guys, don't hold back. Any information, you know, tell him, hey, I put him in the hot seat. That way he can give you guys the info. And definitely, you know, Victor, like I said, I appreciate you being on the call, brother. You know, let them know a little bit of background about you so they know, hey, where it's coming from. And they want to know, man, is it, you know, they want to know, you know, is it a good time to buy? You know, you fluffing us. What's up with this market? Scary. 2008. They got questions, bro, but you know, I'll let you take over, Victor, and I appreciate your time, bro. And we're here. I'm a student always, so I'm over here taking my notes, bro. So I'm over here in the lápiz.
And thank you guys. Hey, well, good evening to you all. Thank you guys for joining on. Thank you, Santiago, for the opportunity here to more than anything just to educate everybody, right? That's the key to it. Just gotta get the knowledge. There's a lot of information out on social media. Everybody has their inputs, their opinions, and you know, it's all good, right? But for the most part, the idea is that we give you guys just information, and then it's up to you guys what you do with that information. You know, it just gives you a foundation, and more than anything, hey, this is where we see things, where we're seeing things, and it's up to you guys to go and do more information. And then at the end of the day is, you know, who's giving you that source of information. So sometimes I'll get in some fights with people on social media because they think things are going one way, but they're not experts, right? They're just people just giving information, and sometimes that could affect those that are looking to buy or make any type of moves. They might just discourage them because there's wrong information. But hey, guys, well, look, my name is Victor Martinez. I am a mortgage broker. We're out of here in California. We service California. We're looking to expand other states. So I'm not sure where everybody's at, but if you could throw in the chat where you're from, I would love to kind of see other locations that we have here besides Cali. So let me see if we can get some interaction here. Okay, Ohio. All right. All right. Hey, I hear Ohio is it's a spot for real estate. I hear Ohio is like it's booming. I see a lot of people from California buying Ohio, so bunch of duplexes, triplexes. So I think that's the next little hub for expansion there. LA, Oregon. Okay, cool. So you got people from all over the US. But guys, look, well, I'll start with this, guy. So here's like the question that we I'll give you guys some basic foundation, right? I think that the biggest concern right now with a lot of folks is that if there's going to be a market crash. I'll tell you what people give me the top questions that I get asked from people. One, hey Victor, is the market going to crash? Okay. Hey Victor, two, where are rates going to be at? Okay. Or hey Victor, three, I'm going to wait because I want to get a 3% interest rate. Okay. These are the topic questions that I always get, right? And let me tell you the first thing, guys. So let me give you guys a quick background where the markets are right now. So one is that we're starting to see rates come down a little bit. Okay. And I'll give you guys the reason why. So inflation has a correlation with mortgage rates. So as we see inflation starts coming down, guys, we're going to see interest rates coming down as well too, right? And the reason why you see people say, hey, well, the Federal Reserve raised the interest rates, and you'll see that more on credit cards, car loans. You might see your interest rate just went up tremendously. And the reason why, guys, is because they want us to stop spending money. They want to slow down the economy, and they want to, because there's not enough goods out in the economy. So to slow down the economy, which that's the reason why things went up, because they want us to stop spending money. Okay. Now, as inflation is coming down, guys, we're seeing a correlation with rates that just happened this last couple of weeks, that we're seeing rates coming down as well too. So that's what's going to happen. If you're looking to buy or get in the market, it should let you guys know that once rate starts coming down, you're going to see more buyers come into the market. And the reason why is because, honestly, guys, it's expensive out there. Let's call it what it is, right? It's expensive to if you're looking at an 8% mortgage rate at a house of 400K, you're looking at close to like 35 to 4 G's of payment a month, which I get it, right? It's expensive, but there's also a upside to all this. Okay, so one of the biggest upsides to all this is right now there's leverage in the market when it comes to real estate. Okay, and what I mean by that is that there's ways that you could do a price reduction. You could do any seller credits. You could, the negotiation in your hands. You have the leverage right now, right? So I'll give you guys some examples, right? We have helped families buy a house with less than 5-10K out of pocket. And the way we do that is we leverage seller credits. We leverage these zero down programs out there that, California has one, but there's many programs out of California you can do with these zero down programs. But that's the leverage that we are doing right now, because people are not buying because they can't afford. Okay. Now, as you guys looking, for next year, if your goal is to buy a home next year, I think the question that I always, people ask me is like, hey, is it a good time, Vic? Well, look, if you ask me, it's always a good time. But in reality is that you have to understand where you guys are at the moment, right? If you feel like, hey, I'm ready to make the commitment because I'm able to afford a mortgage, I have my finances, I have my credit locked down, like Santiago here helping you guys get your credit up, then if you guys are ready to buy a home and able to, then you make it. And if you don't, it's okay, guys. You work your plan, you work on your credit, you work on your finances, you work on things that you need to work on, so you are become ready. Okay. So I think in all this is a process. Don't let no one pressure you guys into, hey, well, just jump in right now because the market, look, you got to be realistic with yourself. If you could afford it and you're ready to go, you make it happen. If not, then hey, it's okay. You work your plan, you stay on your course, and then you guys will be ready. Okay. So that's a little bit of what's going on, guys, in the market around the last couple of weeks because inflation is coming down. So now, I'm sure if you guys maybe saw on Instagram or TikTok or other platforms that the Federal Reserve are cutting rates 6 times next year, right? I don't know if you guys seen it, but what that means is that it goes back to where they're seeing that the economy is getting better, so they're gonna stop the raises, they're gonna cut back on things, and that's gonna slow down the inflation, and that's gonna bring down mortgage rates down. Okay, so what's gonna happen, guys, is gonna happen that you're gonna have more people into the market because now they qualify. not because they're scared, because they couldn't qualify for a mortgage. So you're going to see more buyers next year come into the market. So as rates come down, expect around the times of summertime things to pick up. That's when people start making moves because of the kids, and usually that's the months that things pick up. You're going to start seeing more movement in those type of months because you're going to see things coming down with rates coming down. So that is the big news there. That's kind of off the press right now, where we're going to see some things happen with the market next year. And if you have a mortgage rate right now, and you bought a house this year, hey, next year, guys, it might be a good time for you guys to refinance and then, get into something, more fixed with the rate that you guys could feel more comfortable with. But those are some big data right now in the market with real estate. And it goes back, guys. Right now, like the biggest thing that I can share with a lot of clients that we help is like just get ready, work your plan, stay in course, right? The biggest thing that affects people in today's market. I'm just going all over the place, guys. All right. So if you have any questions, let me know, because I just go all over, because I'm giving you guys what I see. These conversations is what I have every single day with families, right? So let me tell you, one of the biggest reasons why people don't qualify for a mortgage is because they co-sign on people's loans, right? Or they have these nice truck payments of $1,000, right? So look, guys, if you guys could drive your Honda Civic for another couple more years and think long term in your investment, keep your car right now. Some of these cars, if your car ain't making you money, it's affecting you, right? So that is one of the biggest debts, guys, that we see right now is car payments. So if you could be cautious in who you co-sign for, okay? Because if you co-sign for somebody on a car or even a mortgage, that could affect your SWAT too. Okay. So that's one of the biggest things that we see there that affects people when buying a house nowadays. Of course, the biggest one too is a credit score. Okay. We have a lot of our clients help go with Santiago because he takes good care of them. But biggest things that we see on credit is collections, late payments, sometimes repossess. So I think the biggest thing is just make sure that your guys' credit is good. So you guys are able to get a better credit score, and you guys are able to qualify for more programs. That is the key right there. Okay. I know someone asked
Victor.
Yes, sir.
I had a question going back to what you said about the car being a liability.
Was not much.
I don't know if it's relevant or not, but like would it be like troublesome if it was like registered like under an EIN?
Correct. Great question. So whenever we pull a credit profile on a client, if that car payment does not show up on your credit report, we don't use it. Okay. If you have if you have a car note on your business, okay, that's a separate transaction. So it's not going to be part of your application. It's a great question. Now,
I have a question too.
If it reports on your personal, but you have proof that the business is paying for that note, like a business bank statement or anything that the business pays for it, then you can remove that liability from your credit profile, so it doesn't affect you.
Okay.
So good question. It does happen.
I think Sandor, you had a question real quick, bro?
Yes, I have a quick question. Sorry.
Yeah.
I have a question. So I right now I'm finally finding out about taxes, because this is all related. You know what I mean? Taxing and credit and stuff like that. It all goes around a circle. When I'm trying to, like, I'm doing my own research and stuff like that, like doing it my own. So I heard, like, I'm trying to help my parents out, fixing my credit as far as like try to help them refi the house. I have a thing going on with them at the moment, and I want to know, somebody told them like I can't qualify if I was trying to help them with my credit because I own a business, and since I own a business, I do business and taxes together, which I'm not trying to do anymore. I'm trying to fix that. Because it's a lot, man. I've people telling me, hey, you do your taxes together with your business, and I have people telling me do them separate. So I did them together. So the person that was, kind of just elaborated a little bit on, said, hey, you know, you're not gonna qualify because you don't own a business and you don't make this and you have taxes for this. And I have a business, you know, I have my taxes in my business, but I incorporate them together. So now I'm trying to separate them. So is there like is something that you might know, whether it's true, whether it's not true? Does it affect you? Does it not affect you? Like, how does it work, bro? Because, you know, I'm trying to go all over. I don't know.
Yeah,
So I
awesome.
guess the question is, if I have my business, yeah, if I have a business and I incorporated my taxes personally and business together, would that be able to help me trying to refi, like trying to like buy a house, or do I need to have like a actual set of income? Like, how does that work?
Great question. Yeah, great question. So the question would be if so. I'm assuming is that you have your regular
Because I
job
don't
and
have it. I didn't have a regular job. I did not. I've been doing my business for 2 years. So all I have is my business. My business has taken me out of work because it keeps growing. But right now, since the holidays came in, I decided to go get a job, find a little part-time job, which is going to help me a little bit more. And then I'm going to be working my actual social through a job site. But other than that, it's been like 2 years since I've just been handling my business. And I've been doing taxes, business and personal. But it is affecting me because, you know, the tax people want all this money at the end of the year. And it's like, yo, bro, I didn't make that much really because I have all these like deductions and all these like, you know, losses and stuff like that. But still, they want all this money to get paid at the end of the year. You know what I mean?
great question. Yeah, great question. Here's the reality. Whenever you do, you know, in your case, I'm assuming you do your like a Schedule C, you know, regular income. You're not incorporated yet. I'm assuming, or just a very,
I'm an S
you know,
corp. I'm on S corp
S
right
corp.
now.
Okay, S
Mhm.
corp. Okay. So now, do you pay yourself like
Yeah,
a
that's
does
the problem, brother. That's the problem. Doing it all wrong because my business started out of a struggle, and the thing is, it keeps moving, and so I don't really pay myself. I don't tell myself like I should, you know, I should, but I
yeah,
haven't, you know,
gotcha.
everything. I actually just put in the business my workers. Like I have 3 workers, so I throw that in there. Like this how much they made
Gotcha.
a year, but I don't throw
Yeah,
myself on the picture. You know?
yeah, that's a good
I don't know
question,
if
right?
that's wrong. I don't know if that's wrong. I don't know if that's gonna. I don't know. You know what
Yeah,
I mean? It's all new to me.
Hey Victor,
yeah,
real
good
quick,
question.
I just want to chime in. So I'm an S corp, and having payroll obviously helps your business for your taxes. An S corp, I definitely waived a lot of taxes, but I still got to pay. You know what I
Yeah.
mean? So
Yes.
and I feel like think of it as like an investment at the end of the day, because if you're
Correct.
saying you're making money, right, you have to pay something, right? Like I don't want to say how much I owe, but I owe a lot because
Yeah. Yeah. No.
I started
100%. I feel you.
know what I
I
mean?
feel you.
But
Same. Yeah.
I look at it as like, hey, I can go to the bank, put my chest out a little bit, say, yo, I need a
Yeah.
$50,000 loan. This is my tax statement. And based on that, they'll be like, hey man, we can definitely, help you out. So and I know it's sometimes as an entrepreneur, we want to hide a couple stuff or everything was a write-off and stuff
Yeah.
like that.
Because it's not pretty all the time. You know what I mean? As long as you want to make it pretty, it's not because you know it goes like this. You know. So
But the
yeah.
payroll thing is and the payroll pretty much payroll is like literally I only pay $75 a month for my payroll, but it's like pretty much it has everything on check. That's how I pay my
Okay.
employees, and it keeps me accountable. But that way, I don't have to dive into my freaking account and
So
just,
then when did you guys get?
you know what I mean. But just throwing that out there. I know as far as the house market, I mean, I'm sure Victor, he wants to see maybe consistent. That's what banks want to see.
You owe me.
There we go. Hold on, can you mute whoever's? All right. So at the end, the banks want to see that you're making consistent money, how much deposits are coming in, so they can see what they would kind of loan you or qualify. Right, Vic? Something like that?
Okay.
Yeah, great question. And look, I deal with a lot of business owners, and there's different strategies, and I'll share a couple one real quick right now. So
Sweet.
one is whenever you're an S corp, right, and you do that, you're an officer of the company. So whatever income you at the end of the you pay out like to the officers, you know, if you have a loss or a profit, that's where I think it's the issue is where you're not making enough income on paper, and that's why they're saying, hey, well, you don't qualify because there's not enough income on paper that you
Mhm.
qualify for part-time. So
Correct.
that's what it comes down to.
Yeah,
Now,
and that's what sucks. You know, because you got to prove it to them that you have all this money stacked up in there. But then at the end of the day, it's like, bro, I gotta pay all this overhead, whether even though I don't have a food truck or a restaurant, I still gotta pay overhead. That means I gotta go
Yeah.
shopping, I gotta pay this. So it looks pretty on paper, but I'm like, hey, well, I spent all this stuff. Like,
Yeah,
it don't look pretty.
exactly.
So when I try to go refi or try to buy a house, what are they gonna tell me? You know what I mean? Like, is that gonna work for me? Is that gonna help me? Like, I don't know.
Yeah, great question. Yeah, so here's the two ways. So a lot of business owners we work with is they do, hey Rick, look, I report this money, but I don't want to pay taxes because I don't want to pay the IRS. That's frankly what it is, right? Other clients will report what they want because they want to buy a house. Now, if you there are a lot of programs for business owners where you don't have to show tax returns to qualify for a mortgage. Okay, so the way those works are bank statement programs, a profit and loss statement. So I'll talk about the bank statement, which is a very popular program. So a lot of business owners, what they do is on paper taxes. When I look at their taxes, they show they made like, well, let's say an example, $25,000 after profit, but on their bank statements, each deposit they're making about 200K. Okay, big difference there. And I know the reason why, because they're doing a lot of write-offs. Okay. So now the way a lot of these clients qualify is that the bank will use a 12-month or 24-month bank statement, business or personal, and they'll use your deposits that go into that account for qualification purpose. So if each month you're depositing 20, 30K in statements, right, we'll take a percent of that and we'll use that to help you qualify for a mortgage. So that's a way that you could buy a house when you're a business owner and you don't have enough income to report on your taxes. Now, the only downside of that is that you don't get to qualify for all these programs, all these help, because now you're going what is called a non-QM loan, non-qualified loans. When you do a traditional FHA or conventional loan, right, they're going to want you to show all the income, right, because they want you to pay taxes, right? So I think in your case, there's a couple ways you could do it. One is if you really want to buy a house, but you don't want to report all the taxes, is you could use a profit and loss program or a bank statement program. That'd be one option. Or next year when you do your taxes is you are going to have to report more income and you're going to have to pay more taxes, but that's going to be for the benefit.
That's why I kind of picked up on a little side job, because I was like, you know what, I'm gonna keep my side. I'm gonna switch my business to train the business, and I'm gonna keep this little side job so they can just, they take tax away from me and it made me easy. It's not 40 hours a week, but it is what it is.
Yeah, so that's answer your question. So there's ways to do it, but yeah, I think that's the reason why, because there's not enough income on paper. So great question. So I know someone mentioned here, what's the minimum credit score to qualify for a mortgage? Well, look, guys, technically, if you do an FHA loan, it's 580, okay? But technically, you could do a 550 with the 10% down. Now, my recommendation, I would have Santiago help me with 30 points to give me a 580 and did 3.5% down and 10% down. Honestly, right? I wouldn't want you to spend that extra money. The 580 is a credit score that you can do when it comes to a mortgage. Now, someone asked me a question in regards to duplexes and fourplex. Let me give you guys something that just changed here recently. So now you can buy a fourplex conventional, which is 5% down. Okay. So before is when you want to buy a fourplex on a conventional, they were asking anywhere from 15 to 25% down. Now, if you have 5% down conventional, you can live in one and you can use the other 3 rents to help cover that mortgage for you. Okay. So if you guys don't have any houses and you're looking to invest, I would jump on that ASAP. 5% down for a fourplex. Now remember, guys, they use if the mortgage is 6K, but each other unit is giving you 2K or $2,500, they'll use that income to give you income back into your calculation and will help you qualify for that loan amount. So that is huge, guys. Huge news for those looking to invest in multifamily. Now with FHA, if you try to do FHA like a 3 units and more, there is some technicality that you have to take in consideration when you do FHA. There has to pass this test. So pretty much the test is if both the rents will cover the mortgage, even if the property is vacant. So FHA is a bit more strict with the fourplex. But 1 or 2 units, you could do FHA 580 credit score. Some they'll take 580 credit score for 2 units. 3 and 4 becomes more complicated with FHA. But conventional 5% down, fourplex is huge, guys. So that's something that if you guys are thinking about doing it, what should be the minimal credit score to get lower interest rate?
I think what you're trying to say is like, if you have a good credit score, what's the lowest? Like, would it matter? Let's say the market is 6.8 and he has great credit score. Does it matter? Does that give you a little leverage or it
Oh.
gives you lower interest rate? I don't know. Hopefully that's the
Oh,
question.
thank you. Yeah, definitely. Yeah, so that's definitely the higher credit score, guys, is there's a couple factors. One is you're gonna get a better interest rate, and two is if you're doing less than 20% down, you have to pay what is called a private mortgage insurance. Okay. On conventional, you gotta pay this insurance policy for in case you're defaulting your loan. There's some guarantee for the banks, but when you have a higher credit score, guess what? Your credit score is better, plus your private mortgage insurance is way less because you're not a risk to the lender, right? They'll say, hey, Santiago has 800 credit score. He's not a big risk. So we're going to lower down his prime mortgage insurance. And now on FHA, honestly, guys, it's not too much of a difference with FHA that I've seen a big change because FHA is backed by the Federal Housing Administration, right? So something happens when you loan, they're gonna take care of the loan from the bank. So you'll see more of a benefit with your higher credit score on a conventional loan. So great question.
Yeah, I have the follow-up question. So I have a credit score 730. So I just want to know, so what will be the standard credit score so that we will be getting the right lower interest rate. So right now it's in the market 6.5. If we have 750 or 720, like what exactly the credit score? And also I see in all the credit bureaus, the credit score will be different from when the lender is pulling the credit score. Like what exactly, like where to look for exact number to match for the home loan.
Good question. Yeah. So when you're doing a conventional loan on a credit score, I would say anything above 700 and above, you're already in the clear. Honest. Okay. So 700 above, you're good. FHA, anything at 640 and above, you're good on that too. So I would say those are the credit scores. If you have anything above 700, you're golden. That's good. Now the second question is in regard to the credit score that sometimes when you guys look at Credit Karma or not Credit Karma, but Experience, some of the application, when we pull the credit, it's a little different. Santiago, is that because of the what's it called?
Oh, I'm sorry. Oh yeah, good. Just to follow. So what they usually pull FICO 2, 4, and 5, which is an old scoring model. Okay. And I talk about that in a previous call where let's say Vancata, you have a 730, right? That's your credit score. But when Victor pulls it, you'll really have like a 710 because your FICO 2, 4, and 5 is usually about 20 points off because it doesn't factor in the new credit stuff. And I'll give you an example. Let's say you have an American Express charge card. If you even have a balance on the charge card, which you shouldn't have a balance, that holds negative on you because back then the FICO 2, 4, and 5, they didn't have charge cards, right? That was something that was new. So it affects the score. So another thing is like having a loan paid off, that helps your score. So if you don't have a personal loan or something like that paid off, it hurts your score because on FICO 2, 4, and 5, it doesn't count points towards you. So like it's just having more factors. That's why having a good credit profile, matters, and you want to have a good mix of credit. Hopefully that answers the question, Mancata.
Yeah, great to add too. Yeah, so thank you for clarifying something on that too. And then I think I know Dakota has a hand up right there. Go ahead, sir.
Yeah, Victor. So I so much appreciate your time. First and foremost, I just want to let you know I'm grateful to be here. I am up here in the Ohio area, and my biggest obstacle that I'm dealing with at the moment is what is more important, annual income or capital saved up? You know what I mean? Is it more important to have income coming in consistently that you can prove, or coming to the bank with 50 to 100K and saying, hey, I got this in the bank, I'll be able to take care of it, and then coming with a DSR loan, debt to service ratio for a quad or triplex or a quadplex?
Great question. Yeah. Well, there's I'll tell you guys this. So I am a broker. I work with different lenders. Okay, and that gives you flexibility in a sense where, like what you just said, you could do a debt service ratio DSCR loan with no income. You have the capital in the bank, you got the money. Of course, there's some banks that will let you do it if you don't have a primary residence, right? There's some banks that will still give you the money if you put more money down, but it really gonna depend on your situation because of course if you get a job or anything, you got to prove the years, you got to prove that you can do the income, right? The only benefit is that you're able to maybe play the game. And the game, what I mean is that you're able to maybe come with more money, with less money down, right? You live in the property for a year, you rent it out, you buy another property, so it gives you leverage in a sense, right? But if maybe you're not in a situation where you could do that, right? You could do these DSCR loans, you put the money out, boom, and they're quick, right? So it really
So
is gonna
everybody's different then?
I'm sorry?
So everybody's different then? Because like I said, on paper, like I can go to a bank because I do my taxes and I do all my books and I can present, hey, I made over 100K last year. In 2 years from now, my business made over 100. But I could promote it and then say, but what have you made? And that's kind of like the messed up part, you know. That's why it's a good question
Yeah,
as well. It's kind of I
yeah,
feel like
like
it plays together, you know.
yeah, I think what the quote mentioned, like if you have the money, like if he has 100K in the bank right now, he wants to go buy some units or anything, and it's 20% down, he could just you could do it, right? You could do it. So there's and these guys, these are called non-QM loans, right? They're not your traditional FHA loans, conventional loans that they follow these guidelines, right? These are more like investor loans, guys. More investor loans. You know, you're playing the game to leverage, right? So, you know, there's other way. They call it creative financing, right? Another word, another terminology for it too. So, yeah, and your kids could. I would say like it really depends, right? Because if the only advantage of it is if you have your job and everything is that you're gonna just come in with maybe lower payment, maybe use a program, assistant program, and you're playing the leverage game where you're gonna buy with low money and use your other money to invest. That's the only benefit. But if you have the money to go put it down, you don't have to worry about anything, no income documentation. You just put the money. You're just playing the investing game. So I hope
Yep.
that kind of answers.
Absolutely, and that's the play. I'm planning on doing the Burr method. I want to get at least a fourplex, live in one for up to a year, rent the other three out, and then after that year, move back into where I'm at now, rent that one out, and do the same thing over until I can build up enough, a good enough real estate portfolio to go get my dream house, which will be in Houston, Texas. So
Yeah, exactly. Yeah.
what are we looking at as far as a down payment for a DSR loan? Is there any down payment, or can you get it 0% down?
Yeah, usually DSCR you can do anywhere from 20 to 30%, right? Because the biggest thing
20 to
here is that
30%?
yeah, 20 to 30 with DSCR, because remember these DSCR loans, the rents have to cover the mortgage payment, right? So depending your area of Ohio, the rents are not as high, right? It may require you to put more money down because you need to cover the rents. Now, if you live in an area where rents are higher, then you don't have to put that much money down because the rents are higher. So usually 20-30% is the threshold there.
Right. Here out in Ohio, I've been looking in the market, and even right now, I can get a nice, very close to turnkey fourplex for anywhere between $80,000 and $120,000.
Yeah, that's crazy.
Yeah, it's lovely. So I just want to continue to build my plan. You know what I mean? Obviously, Santiago is helping me get my credit all the way up. You know what I mean? I'm past the point of rebuilding it. I'm tiptoeing into the leveraging of the credit. So I just want to have a concrete plan moving forward and really have it clear and cut on the best way to get into the investing game. You know what I mean? I'm not looking to go cash out on a $500,000 home and be a slave to the mortgage for 30 years. You know what I mean?
Yeah,
So
exactly.
I want to go around it. So
yeah, so you're comparing like 80 to 100K here in California, you're looking about 3 to half a million or more, right? So it's a big difference, right? So when you're playing that game, right, like you think about, okay, well, that for me, it's like, man, I can go buy like 10 of them right now, right? But it's different right here in California, the game. But good question, yeah. So good. I know there's another question that was here. Yeah, thank you, appreciate it. So there was another question here. It says, what's the minimal credit score to get an FHA or an assistance? So look, guys, there's programs that we work that will take a 580 credit score to help you with your down payment assistance. Okay. Now, here's a trade-off. Honestly, when you have a lower credit score, well, guess what's gonna happen? You're gonna have a higher interest rate. That's a reality with these down payment assistance programs. And these programs, guys, is not free money, right? Nothing's free in this country. So you're gonna have to pay it back eventually, like a credit card, but it gives you an opportunity to start building equity in your home. Right. This year alone, guys, this year, we are gonna see a 7 to 8 appreciation gain on properties. So if you have your property this year or you bought this year, you're getting 70% equity already paid, right? So you're making money, right? So I think there's leverage, right? I don't really, in my opinion, if you could afford the payment, I wouldn't really go too much on the rate. I would just focus on what you guys could afford, you know. The other question, what's the best lender to go for DSCR loan? So great question. So look, we work with 30 different investors, and here's the situation. Every client is very different. So I'll give you an example. If I have a client that meets all the checkbox, but has one little maybe thing that we need to work on, I know a lender that will do that loan for us, right? If your paper is a good paper, everything is good, then there's lenders that have the best rates because everything is checked off pretty good. So it really depends on your situation, right? So I have lenders that will do us favors because I always call it the tricky files. I know what bank will take care of those for me. And I have clients that have good A paper. I know which bank will give me the best credit score and best everything ran around because they're A paper. So yeah, good question, but it just depends on the client situation. So good question, guys.
Thank you. Thank you.
Dakota, just wanted to add.
Yeah. Go ahead, Santiago.
Dakota, remember, you guys that have great credit scores, okay, what you guys can do to leverage and help out with down payments and stuff like that, you guys should have an LLC established and then pull
Okay.
into that business credit where, like, let's say you have a $20,000 card that's 0% for 1 year, you can tap into that so you can use that as leverage for down payment, and it's literally not coming out of your own pocket. It's a business, since you're saying you want to move into like a fourplex or say, and then now you're okay. If it's 80,000 to 100,000, what is 20% down off that? You know what I mean? So now you're like in a better position where you're using business credit because you are want to get into the BRRRR method, and now you don't have to tie up capital, but also if things need renovations or anything like that, you have access to more business. Because with your credit score right now and opening up a LLC, like you have access to 40, 50,000 on the low end. And that's not
Okay.
even trying. But that's
Right.
because you have good credit, just trying to get to a different level on the credit. So use that to your advantage. And I feel don't sleep on, well, fuck, I don't know what LLC to get, or I don't know what business to start. Well, you know,
Just
just
get it structured.
Dakota Consulting. And
Yeah.
that way you can go in any direction you want to go to overall, right? So
Make it versatile.
but yeah, it just helps you out more, and now you have more leverage, and you don't got to worry about, man, I got 50 grand in the bank, but I want to hold that in case, you know, for a rainy day. But you know, everything's a risk. Everything's a risk. Whether you buy now, that's your decision. Whether you buy later, and then you kick yourself in the ass and say, man, why didn't I buy back then? You know what I mean? Remember what Warren Buffett says, right? Be fearful, right, when everyone's greedy, and be greedy when everyone's fearful. Right now, I feel like everyone is fearful.
Absolutely.
Hi, Vic, would you say like everyone's, or what you think? What you think? Or maybe
Yeah, it's true, right? People, I almost get in fight with people. They're fighting me because you know they're like no, like don't buy nothing, don't do this because it's the scare mentality. But those that are taking advantage of the market, they're winning, right? And look, guys, I'm not here to tell you to go all in and be and risk it all. I'm telling you, there's ways to be strategic, right? So don't hold me to it. But let me give you guys one more gem here. So there's just been an announcement with FHA loans now, right? So FHA now allows you to use rental income on ADUs. Okay, so if you guys don't know what an ADU is, let's say you have your house and then maybe a garage was converted to a home, or you have a back house and it doesn't have all the right permits. Now you can use that ADU for additional rental income to help you qualify for that. Okay, so let's say that house with the back unit, but the house is worth 500,000, but you only qualify 400,000. But guess what? Now with the extra income that you can use, it will help you qualify for that home. So that's another huge one there for those that are looking to get into. If you can't find a duplex, maybe find a house that has an additional house or a garage converted, and you can use that additional income to help you qualify for the house too. So big changes with FHA with ADUs, right? So here in California, right, there's a shortage of homes, right? And I don't know if we've seen a lot of people do ADU conversions because of that. So if you guys are looking at that, just keep an eye on that too with FHA. So that's a huge win for those that are in the market for that.
And then real quick, I think the biggest hack that I can leave you with is if you serve our country, you get a house 0 down. No, I'm just kidding. No.
True, the VA loans, right? VA loans are
It's a deal. Do you recommend keeping an S corp or go LLC?
For tax purposes, I mean, depending on what you do specifically, but
For everything, brother.
I think S corp. I mean,
Yeah.
I've saved a lot of taxes on
S corp.
yeah,
yes,
S corp, man.
Corp. I agree with you on that too.
Okay, cool. I appreciate that because I've heard some people say you need to go to LLC because you get more benefits out of this, out of that, out of this, and then I'm like, oh shit. That's why I said that's why I'm going to the new tax person because I have a lot of questions, and one of them says something, the other one says something, and the other one says something. So I'm like, holy shit, who's right?
Yeah, there's we're even myself, we're learning that game. We have
You know what I mean? It's hard.
Our CEO is investing heavily onto these top guys, and hopefully once we get the knowledge, because I'm learning too, but hopefully once they get the knowledge, I'll be able to share with maybe hopping on the call with Santiago here. But all these people that they have a structure like with trust, they have it legit where they're not paying, like they have a structure well where they're playing the game where you don't pay taxes, right? It all goes to a trust account, and then the S corp pays this person, and it's all like mapped out like legit wise. So best believe that these people that are up there and they have their businesses, they have it structured correctly. So I can't speak too much on it because it's another language for me too,
Yeah,
right?
see, I mean,
Yeah.
because I with some like my tax person before told me, I suggest you go to S corp. I said, why? LLC basically what it does is it covers you. If something happens, the LLC kind of like backs you up or something like that. All that good stuff. And she told me, she says, but at the end of the day, it's not anywhere written where they can't come sue you. So it's the same shit. The only difference is you're paying the tax fee, which is like, or whatever it is, that fee for $800 or whatever every yearly for having an LLC supposedly to cover you. But I know that they'll give you like when you go apply for business credit, this and that. Once you have an LLC, they kind of back you up more than having an S corp. But then having an S corp is better than an LLC when in person or doing personal taxes. So it's all over the place. That's why I'm like, dude, who's right and who's wrong, or how do I do it? So I have so many questions because it's all coming fast, man. All fast.
Same thing I believe you with. I know our CEO tells me, hey, you gotta graduate levels when it comes to you gotta graduate mentors. If that CPA or whatever tax person is not giving the right information, you gotta graduate. You gotta get the next person that's gonna help you out, right? So, but there's levels to this tax game, right? There has to be, right? You think all these big companies don't know how to play the game? Come on,
No,
right?
of course, yeah. That's their daily.
Yeah, it's a game, but I don't know if anybody has last minute questions here before I don't know how much time I have, Santiago, but I appreciate you guys, your time here. I know there's a lot of questions to this game, to this market game. I'm always available for any questions, and I'll direct you to on the right direction if I don't really answer. I'm here to help, support, and provide any info that I
Hey, can you put your Instagram so people can follow you, please?
Yep.
Yeah.
Where can we find you at, Victor?
Yeah, we can find you.
I'm growing my YouTube channel, right? So I'm gonna put my information here, but I'm gonna leave you guys with my contact info.
This call's gonna go on my YouTube channel, so you expect some calls, brother.
Yeah. So I'll put my stuff there, guys, and then that way you guys can have my information. Hit me up, and then You know, if you guys want to talk any strategies or anything I can help you with, let me know. There's different guys. If you guys want to buy a house, there's ways you could do it. But believe me, there's many creative ways. So don't get limited to just FHA convention. There's multiple ways that we can make it happen. So you just need that one person that's gonna guide you through the process. So
Appreciate you, Vic. Like I said, that's why I bring him on. He gives genuine info. Definitely, from his experiences, he's dealt with all different types of loans, I-10, social, whatever it is. And I feel like, as a homeowner, I feel like everyone should have a home. Whether it's you want to start off with property rentals or something like that, just get in the real estate game. We all know that's like real generational wealth, because you're buying it now, and who's gonna take over? You know what I mean? Your kids, or whatever it is. That's the real game. And when it comes to
So-
taxes, one thing that I've learned as a business owner, hiring your kids so that you can have that $12,000-13,000 in payroll tax deduction, but have them actually on payroll, because you have to prove that. It's not just, hey, just put my kid on there. He helped me throughout the year. It has to be documented, so everything can be, documented. Like, it just so you cover yourself. Like, if as a business owner, you can rent out a room in your house, and $14,000 a year can be used as a tax write-off. These are things that your accountant or your tax specialist should be giving you as just, more help, more knowledge, and educate yourself. So now you know how you can save more down the line, and then I remember one tax guy said, he says, the difference between me and people is people buy stuff, right? Just to buy stuff, but I buy stuff to write off. You know what I mean? Like, as a business owner, like, if you're gonna buy something to write off, now is the time, because you won't be able to do it next year. You know what I mean? Like the Corvette, I bought it in 2023. You know what I mean? In January. So I'll be able to write that off in 2024. I'm sorry. This year, coming for January for the taxes. You know what I mean? So little things like that. So if you're a business owner and you want to buy stuff now, because you can write off more. Yeah, so any other
Yeah,
questions?
I
Because-
separated that because my truck, same thing as you, Santiago. You have your car. I have my truck. I bought it, but I separated. They told me I could separate the payments for my business in 4 payments or 3, so that way it benefits me, like, to lower my leverage. Instead of doing it all in one, I can do it in 4 different times.
All right, guys. Hey, guys, appreciate you guys to call. Victor's number's right there, 209-342-8998. Make sure to follow him on IG, and
Okay, my
if
friends.
you have any questions on the DM, maybe you were too embarrassed to answer it right here, just hit him up on the DM. Like I said, he quit his 9 to 5 so he can work 24/7.
24/7. We're all in. We're all in here, guys. I appreciate you guys. Thank you so much, Santiago. Appreciate it.
Hey, Victor,
So much
thanks for joining us.
appreciate you, Victor.
All right,
All
I'm
right, guys, take
gonna
care.
stay on real quick because I want to talk about something for like 5-10 more minutes. But I appreciate you, Victor. And what I want to share with you guys is this credit stuff, this credit game. Like, it's a game. Either you know how to play it, or you get dealt with it. Like, you know what I mean? Paying high interest rate, not being able to qualify for something. Like right now, December, people are trying to get, hey, you know what? An extra 5,000 would come in good right now, so my kids can have a good Christmas or something. And I say, like, look, you're gonna suffer now for a better Christmas tomorrow or next year. You know what I mean? So you have to, like, really think about a game plan or strategize. So, like, let's say this Christmas coming up, it's a shitty ass Christmas for you. And I'm gonna say it like it is. You know what I mean? Hey, you know what? Money ain't right. My kids ain't gonna get what they want, or what they, really want. You know what I mean? And you put in the sacrifice. Like, hey, you know what, kids? This Christmas ain't gonna be good, but I promise you, next Christmas is gonna be better. But you got to really put in the work. Not just say that. Everyone's talking about, 2024, new year, new me, and they're already saying that now. But how are the finances? Like, how are the finances? It goes like this, and I've said it before. There's people that get paid twice a month. If you get paid twice a month, right? How are you going to get out of the rat race if you're swiping your card on average 144 times a month? And what I mean by that Haircut, swipe. Groceries, swipe. Gas, swipe. Nails, swipe. That's already 4 swipes. Real quick, 4 swipes. How am I gonna get ahead if I only get 2 deposits a month? One on the 1st, one on the 15th. Nobody's gonna get ahead like that. Unless you're a CEO and you're making 400, 500,000, right? So think about that. And what I mean by that is have a way to make an extra $1,000 or $2,000 a month. It could be something, hey, you know what? I'm gonna paint sidewalk curbs. I'm gonna paint addresses, $20 a pop, right? If I do 4 in a day, 4 or 5 in a day, that's $100 that I spent like an hour and a half to do. Okay, things like that. Okay, I always talk about photo booth, right? If you want to do a photo booth, that takes low capital, 1,000 or 2,000. But you guys have to do something else, or else working harder is not going to get you there. All right, think of something that you're passionate about. If you like to do it, it's not work. Like I can talk all night because I'm passionate about this. Like this to me is not work. And I mean, I look forward to these calls because I get to connect with people like you. And I get to see, okay, you know, Dakota's got a passion for real estate now. Like he can see the vision.
I'm sorry.
Curricular activities when driving.
We're here.
Can you hear me?
Guys,
All right, cool. But yeah, guys, and like I say it because it's reality. You know what I mean? Reality that if you're not invested or you don't see like what's really out there, how are you gonna grow? And it all starts from the circle that we're all in right here. Okay, you know, like the people that show up, they want to change their mindset, they want to change their credit. They're tired of renting, or they're tired of staying wherever they're staying at. You know what I'm saying? And it's just, if you believe and you're like, hey, you know what? Let me just invest a little more here. Let me try this thing out. Let me get a part-time job. Because if you're sleeping 8 hours a day and you're still renting, like there's a problem. We should not be sleeping 8 hours a day. The sleep is good, but you know, I'll sleep when I get the pad. I'll sleep when I get my rental units. Like right now, I just gotta grind. I gotta figure this out because if I'm alone, or that's why I did the private Facebook group. I'm gonna be putting more information. I'm gonna put this recording right there, you know, so you guys can see. There's wins that people got that I haven't posted on there, and I'm gonna tell people to start posting the wins in the chat so you guys can see, you know, the possibilities. You know what I mean? Like Dakota, I'm telling you, man, with your credit score, bro, you can do damage, like real damage, and then that's all it takes. You know, the knowledge, a little bit of risk, and hey, you know, let's run it through. Let's run it back. If this works, let me run it back again. You know what I mean? And just like I said, real quick, if you guys have any questions regarding credit, we'll go 5-10 more minutes, and then we'll call it a wrap. I appreciate everyone that chimed in. Who we got here? We got Louis, Nina. I'm sorry, what's your first name? I don't know if I've seen you before. Or what's your first? Maybe is it Cindy? No. What's your first name?
Who's mine?
Yeah.
Nina.
That's your first name?
Well, that's my middle name. Valvina is my first name.
Valvina.
Yeah, Valvina is my government name.
Who gave you the link? I'm just sorry. I want to. Did we give you? We shared the link with you?
Yeah.
Yeah, because I haven't seen you, so I just wanted to connect. Like I said, I have, you know, a lot of people that I deal with that I just first time I'm seeing you. Thank you for joining, though. I appreciate that. Hopefully, you got some good information to, you know, to really you know, use it to where you out of?
LA.
Oh, nice. Okay.
Yeah, it was good. Yeah, it was good information. I appreciate it. It was really helpful with credit wise, and I'm a homeowner already, but I was trying to expand my thing of, you know, buying more property out here in the future.
Yeah. I mean, you gotta, like, the fact that good that you're a homeowner. Some people that locked in a home and their interest rate is really low, you know, we're blessed because no one's gonna see 3.5 or even low
Yeah,
4s.
I think it was 24 years ago. I was 21 when I bought.
Damn, so you're sitting on equity.
Yeah.
Have you
This-
pulled? No.
No.
Damn. So that's another conversation.
Yeah.
You know what I mean, I feel like a lot of people are sitting on equity. Like
Yeah.
my mom lives in Burbank, and she has a $1.2 million house in Burbank that she bought for 200K. You know what I
Mm.
mean? My brother lives there. Okay, and I tell my brother, and I tell him like like my bro, I go, bro, don't think that that house is gonna be yours or mine. That's mom's. She can do what the hell she wants with that house, whatever. She wants to sell it, go travel the world. Don't expect it. That's why you got to buy your own properties. You know what I mean? But my mom is sitting on like $800,000 of equity. You know what I mean? And she is in a position where she can refi, take out some money, put that in some apartment or something, and start collecting some rents. But that's why I'm gonna get into it, so that way she has no doubt when she wants to do it on her end. So it's like
Right.
I'm taking the risk. She sees the growth, then she'll believe. Because right now, it's like, okay, well, you do it, and then I'll see if it works for you. Because someone's got to be in the family to take more risks. He was just in a good position when she bought in 1997 in Burbank, where the properties were like 200,000. And now, if we all knew, hey, I should have bought, in 2009. Now we're like in 2023. Like, damn, dude, you can't buy nothing in Cali. You can, but you can't. You just got to go out to it. You got to go like
Rialto, Riverside.
Riverside, Rialto, freaking Needles, right? Like,
I'm with the guy within you in Ohio there. He's doing it smart. Where it's very low and he wants to come back to Cali. That's a smart idea.
Yeah. Well,
That's a smart idea, man.
I have my brother working on a few properties right now in Atlanta. I have a friend who's a broker, and they flip houses. So my brother, they just flew him out there for 4 months to go repair and fix stuff.
A lot of land out there.
Yeah, all over Georgia. So that's my next thing that I'm gonna get into. I'm gonna invest into it.
yeah, guys, like I said, just risk more.
Yeah.
No risk, no Rari. Everyone that got where they're at is because they risk a lot. You know what I
That's
mean?
true.
It just does not make sense to me to lock into a 30-year mortgage at $3,500 a month when there's a system that people have proven is possible to have other people pay for your mortgage. You know what I mean? It just
100%.
it makes too much sense for me.
Nice, guys. So I'm gonna wrap it up real quick, guys. I'm gonna put this call on the YouTube. So definitely appreciate you guys tuning in. I'm gonna have the Spanish call tomorrow for those of you, mi gente en español. And then, like I said, guys, for those of you that haven't got my book, everyone should have got it. If not, text me. I'll make sure I'll send it out to you guys. And like I said, let's connect. All right, guys. Have a good one, guys. Have a good one.
Great Zoom call, value packed. I appreciate you.
Thank you, guys. Have a good one.